Hey, folks, welcome to Market Intraday Analysis by InTheMoneyStocks.com, your leaders in pure technical analysis, avoiding all that Wall Street hype. Today, Thursday, July 1st, 2010. Well, here we go again, folks. Intraday market well off the lows, in fact, nearing the highs of the day after a dramatic reversal in the markets. Now, we're going to discuss exactly what went on today, but bottom line is you have to recognize where the market is over the last multiple day period. And in all fairness, really over the last couple weeks, the markets have been crushed. And if I go to the chart here on the 60-minute, you can see going back all the way to the 21st, which was that Monday when we gapped up to 113 and change, the market has just basically sold from there. I mean, it's been a straight shot down all the way to the lows today, which took us to 101. Now, 101 again is just above that even number 100 on the SPY. And since then, look at the rally on the markets. The markets have continued to rally. They are just down 25 cents. The Dow was down well over 150 points earlier today before this rally. And again, the markets are just sitting fractionally negative on the day. In fact, very close to the positive side. The Dow is down 31 points. NASDAQ is down 4.5. S&P 500 down 1.5. Again, fractional move to the downside. Now, what was the key catalyst for some more selling today? What panicked people this morning? This is exactly what it was. Jobless claims. Jobless claims were expected to fall, basically go towards and below that 450,000 level, which would have been a bullish sign to see less people filing for unemployment. However, they rose 13,000 to 472,000 today. Expectations, again, were around 455,000, so almost 20,000 worse than expectations. That is not good, folks. Continuing claims also rose to 43,000 by 43,000 to 4.62 million. Now, that was just the tip of the iceberg. The markets opened basically flat on the day, and then again slowly started to inch in to the 10 o'clock time frame. And at that point, let me flip over to the intraday chart so you can follow the markets piercing the 50 moving average. At that point, we got the ISM index and pending home sales. Both of them not good, folks. Pending home sales, again, dropping 30% in May. 30% drop. Now, should that be a shock to anyone? No, absolutely not. Why? Because the tax credit expired. All right, so you're telling me that now if I want to buy a house, I'm not going to get $8,000. Well, wouldn't I have just bought one before when I could get that $8,000? Why would I do it right after? That would be stupid. That would be asinine. Why would I do it? So bottom line is that's going to be expected. You have to expect a dramatic fall in home sales, just the way it's going to be. ISM index was reported at 10 a.m. Eastern as well. The Institute for Supply Management index fell 56.2% in June, down from 59.7. Analysts were expecting 59. So 59 was expected. It came in at 56.2. That is a lower level. The markets, again, continued to sell here. You can see what happened. The markets really right around the 10 o'clock level broke through the low from yesterday. That low from yesterday was a key level of support, and from that point on, the markets just collapsed lower. And for the first 2 hours or so, till about 11:30 to 11 o'clock a.m. Eastern time, this market fell dramatically, folks, and finally made a little bit of a bottom just above the 101. Here's your 101 level, and again, you can see just there, 101, markets getting a little bit of a bounce. And ever since that bounce, the markets have reversed strongly to the upside, coming back just within a shade of the 103 level. 103 is a master level, as is 102. Looks like we're going to possibly have a bottoming tail on this daily chart as well. Take a look at the daily. It's hard to see here. Let me zoom in a little bit. What you can see right here is a possible bottoming tail on the daily, and I can't do more than that on this chart because those are for premium members. We really focus on that in the nightly video, dissecting this daily chart to give people good swing trade opportunities and how to position themselves. But in any case, going back to the intraday here, 10-minute chart, beautiful bounce, then consolidation. That's an in spirit of bull flag. Beautiful bounce to this white trend line, which is at 103. Then we've chopped and gone into consolidation mode, tested the 50 moving average, still consolidating. If you break through that 50 moving average, folks, this market could be on a run all the way, and I repeat, all the way back to 104 and change, which would be right up here. You get up to 104 and change, you're going to hit some major resistance in this market. In any case, what a dramatic reversal so far today. The big question in my mind is, today's the first day of the quarter, so are we seeing new money being put into the market now after window undressing occurred over the last 3 to 5 trading days, when again, that was when the markets dropped so dramatically? Are we seeing, again, money being put to work that's lifting the markets here? Are we seeing basically sentiment? And you guys, sentiment's a big thing with me. It's psychology. Psychology of the markets is a major indicator that I utilize, and people had just gotten so bearish yesterday, today, that you had to expect a little bit of a reversal. And again, I did pick up a couple of little odds and ends on the long side, posted in the hot charts and alerts. And again, we're going to continue to follow those overall and continue to make some money in that hot charts and alerts, which is part of the research center. You get that included in the research center. In any case, folks, right now, this is the big level you're watching, 103. You have to clear 103, which is also the 50 moving average. If you clear that, this market should rip higher. And I do believe that, folks. And again, the big question in my mind is, where do we end today? Do we have a bottoming tail on the daily? Do we sell off by the end of the day and come all the way back down? That would be very bearish if we did that. If we came all the way back down, very, very bearish overall in the charts on a daily basis looking into the next few days. So you're really, again, watching to see where this market closes, and that will tell us in a good way where to expect the market to continue in the next couple days. I will cover all of this in the nightly video tonight for my Research Center subscribers under the under the nightly video technical analysis point of the Research Center, all right? So that's what we're seeing right there. Now, again, some stocks. What's a big leading stock here? This is the leading stock of the day, folks. Goldman Sachs, very impressive on Goldman. Goldman Sachs is up $1.25 or so. Now, again, it's not such a dramatic move, but the consideration that it was down here and actually started to rally. Look at the time the rally started on Goldman Sachs. It started at 10:30 a.m. What time did the spider start to rally? At 11 o'clock right here. You see how Goldman was a leading indicator there and started to rally half an hour before and really start to rip up. Then the markets finally led on and followed case. And again, look at that move up. Now, JP Morgan still needs to catch a little bit more of a bid. It's had a great rally off the lows. In fact, we're already in the money on this, sizably on this play. Very, very nice entry on this at 35.70 for those of you in the hot charts and alerts that watched that today and looked and got that trade. So a beautiful move here, already up about 40 cents on this trade. Again, I'm going to hold it as a swing trade. Most likely break-even stop will be in at this point. So great swing trade here in progress for those of you that are members of the Research Center. And again, that's what it's all about, picking the spots. When you see something in the charts that's telling you the market's going to make a dramatic reversal, got to hop on board. That is what we did here. And again, some other plays in the intraday stock chat, other plays in the Research Center and the Pro Trader watch list. Some good keys to note here as well. Now, other than that, folks, Apple Computer. Apple's had a good reversal as well. Apple got crushed to $243. Now it's back $5 higher to $249, to $6 higher. And again, the other play that you want to follow is ExxonMobil, which is down 24 cents, and Chevron. Believe it or not, for this market to really sustain the rally, in my opinion, you need to have Chevron and Exxon rally. They have not been able to rally. Take a look at this daily chart on Chevron. Look at that chart. Basically, from a week and a half ago to 2 weeks ago, this hit 77. It now hit a low today of 67. That's a $10 drop on a $70 stock in a matter of 2 weeks or less. That is tremendous. That is unbelievable. And again, if this can form a little bit of a bottoming tail, we might be in luck here as well. You want to see, ideally, this stock go to the positive side today and close strong, and that should set off a little bit of a push-up for the next couple days as well. So we'll follow it very in-depth, folks. Again, I strongly suggest you join the Research Center. This is where it's at. This is where the money's going to be made in this wild, volatile market. This is where the education, where people become amateurs or go from amateurs to becoming pros. That's where it all is, folks. Talk to you soon. Have a wonderful rest of the day.